Well, hello and welcome to Master Horne Investing. Today is the 1st of November 2022. Fed will be coming out with their interest rates tomorrow, changes and so forth. So we're going to be looking at a good buying opportunity today in the markets. So first disclaimer, of course, I don't provide investment advice, and I'm not an investment advisor. You're not paying me to do any kind of investment advising. This is just to help you make some of your own investments. And remember, investments can lose value. So today's buying opportunity or recommendation is EPV. This is an exchange traded fund, an ETF, done by ProShares. So I like ProShares because they have a number of things that we can trade that are kind of market related. So you're not looking at just one individual stock. You can find a direction for something like the whole stock market, and then you can trade these ETFs. So what we're looking for is on this one is this ETF. What it does is it triples the market in reverse. So if the market goes down 1%, the fund will go up 3. If the market were to go up 3, the market would go down the fund would go down like 9. So it's a lot more volatile. So you don't want to put too much money into any one investment, especially one of these. But it's a good opportunity. Looks like going forward for the next several months. So as many of you know, I like these ProShares ETFs. So for example, when the U.S. economy is doing well, I like the TQQQ because that works off the NASDAQ 100. So the NASDAQ 100 goes up 1%. TQQQ can go up 3%. The UPRO goes off the S&P 500 index. So again, if the S&P goes up 0.5%, then it goes up 1.5% for the day. So when you have a market trend going up, I like to trade TQQQ and UPRO. However, when the market's going down, you can do the opposite. You can buy SQQQ. Think of it as shorting S, QQQ being the NASDAQ 100. So if the NASDAQ goes down 1%, then SQQQ goes up 3. SPXU is the same idea, but just on the S&P 500, goes opposite the S&P 500, triple. So what we're looking at now is the European stock market. Now, the European stock markets do not look good. First of all, they're having a lot of energy problems over there, and it's going to be affecting their economy. The dollar's very strong. That's affecting their economy. They can't get oil. They can't get heating oil. Energy is a big issue. They're in big trouble. They have inflation that's worse than the U.S. So this looks like it's right to have the European markets go down. Now, there could be a couple more days of upside on the European market. And we've had a run here in the U.S. market since October 21st, and the European market seemed to be following that and having a run up with it. That means this fund has been going down. So what we're trying to do is buy it on the dip. So let's take a look at the chart here. So if you look at the FTSE 100 year to date, you see that it's been kind of trending this downward. It was coming along its 100-day moving average. It broke through. So basically, see if I can kind of get that up here on the chart. So it's been coming here. It's broke through this moving average and it's been kind of trending down. It's now come up, and right here, it has just touched the 100-day moving average again. And it looks like it could be headed down one more time. This is the fund. So the ProShares EPV fund. As you can see, it started out the year down here. It had a wave up, came down, had another wave up, came down, and what it does is it comes back down and it touches this 100-day moving average. So this line here is the 100-day moving average. This line here is the 200-day moving average. So it came up again, touched, boom, and we're right here again. So we're right at that 100-day moving average. Now, could it go a little bit below, just like this one did? Sure. So is this the absolute bottom? It may not be. But that's kind of why we're looking at this as a buying opportunity this week. So, what we're looking at, what we're focusing on here is being the European market is in this downtrend. EPV then is in an uptrend, and you'll notice that every time it rallied, it bounced off that 5 times so far this year. It's bounced off that 100-day moving average and moved higher, and the average gain has been between 20 to 40%. So one was about 20, one was about 30, and the other 3 moves were all around 40% moves to the upside. So since it tends to move in this 20 to 40% range on the waves, this pullback gives us a buying opportunity where we can make maybe another 20 to 40%. That's kind of the goal. So now just remember, nothing's guaranteed. So just because something's been in a wave doesn't mean it's going to continue the wave. And just because it's done it 5 times doesn't mean it's going to do it 6 times. So it's not for sure going to happen. But with Fed raising interest rates 0.75% tomorrow on the 2nd, and markets will probably run, at least last time they raised rates, markets ran initially on the day the day they called the interest rate increase. The markets ran and had a big update, and then started a downslide the next day, which lasted for over a month. So if the European market's going to follow suit, it might run up tomorrow also, and then start down on Thursday. So if you're thinking of buying this, you can wait and see if it actually starts down on Thursday and buy then. You can dollar cost average a little bit, buy some today, buy some tomorrow on Wednesday, and then buy some more on Thursday. So let's say you wanted to put a total of $2,000 in this thing. You'd put maybe 700 in now, 700 in late tomorrow after the Fed announcement, and then on Thursday add another, add another 700 or 600 bucks. So I wanted to look at the long-term chart, and unfortunately I thought I had the video off for this portion, but it doesn't let me turn it off while I'm recording here. But this is a 10-year chart of this EPV investment. So you can see back here, I mean, it was way high, and it's been on this downtrend ever since. Well, the markets have just started their sell-off process, which is probably going to continue through next year. And this has a very good opportunity to run back up into this range, say up in here. So this could be one of those investments that just over the next year, if you just bought and held it, it could go up 150% or 200% or 300% over the next year as the markets decline over in Europe. However, this is back to that chart again. If we just look on a shorter term and you just say, no, I maybe want a short-term play, you can see how fast this spikes. It hits these numbers and then boom, and within just like a couple of weeks, it has a huge jump. Then it comes down and then boom, within again like a month. That was probably a little over a month on that run. This one, just within a matter of days, boom, right back here at the top. Even if you just caught one of these runs and then sold and didn't try to catch the very peak, you could still make, say, 20%, 30 to 40%. Like this one right here, even if you sold early, even if you sold or late and kind of sold up in this range, yeah, you might have made 40 at the top, but you still could have made maybe 30 right there. So we're just looking for a run. Like again, if you bought this down here somewhere, like right here, and maybe didn't buy it right at the bottom, maybe you bought it right in this range, and it ran up and you sold it here, you still would have made 20%, even if you didn't catch this high. And then if you bought it here and it kind of ran, and you kind of sold it somewhere again, you don't have to buy the very bottom. You don't have to sell the very top. So even in a short-term move, you can make some big runs. Or for a long-term hold, I think you can make some exceptional returns on this as the market's on the downside. So world markets do not look healthy. Overall world markets do not look good. And the European area, the euro, I can't say the euro, it makes it sound like I'm talking about the euro dollar, the euro currency, but the euro area, the European area, it's having these energy problems. It's been having national disasters. We got wars going on over there. I mean, Europe is just ripe for problems. It's ripe for a decline over the next 6 to 12 months with these higher interest rates. Their inflation's worse than ours. It looks highly likely that their market's going to continue on the downside. So again, today's buy recommendation is to buy EPV. It's a stock symbol. So you have to have a brokerage account at whatever, Robinhood, E-Trade, and then you'd put in an order to buy EPV, and you can put a limit order, like you could buy it at the market and just pay whatever it's right now. You could put a limit order to say buy below 16. At the time I was writing this, it was at 16.11. And so let's say the markets run up a little bit more in Europe tomorrow. Well, then the price would go down and you'd be able to catch it maybe below 16. So you could put an order to buy at 16, or you can just buy some again, like buy some now, buy some after the Fed meeting tomorrow, buy some more on Thursday. And that way you kind of dollar cost average in. The idea is don't over allocate. I mean, you want to have a wise position size here. So don't just say, oh, it's going to go down. I'm going to throw in, I've got 10 grand to invest. I'm going to put 8 grand in this thing. Well, it may not work out. So or may not work out as well as we hoped, or may take longer to get there, or maybe the market rallies more in Europe and then sells off next February and March. And so it takes you longer to get there. And in the meantime, maybe you're panicking because you have all your money in it. So that's usually not a good way to invest. You usually want to say, okay, I want to allocate 5% or 10% of my portfolio to this kind of an investment. So you say, okay, if I'm going to put in 5% and you have 10 grand, that's only 500 bucks. So yeah, you could put it all in right now, or you could buy 200 now and then another 150 tomorrow, another 150 or something on Thursday, that kind of an idea. So be careful on your position size. In other words, don't over allocate into any one investment. Hope this gives you a good idea for some investing, and you have a great day.